Okay, so I think the way green hydrogen is usually produced right now is with electrolyzers. And these electrolyzers require ultra pure water and they produce hydrogen and oxygen as a byproduct. And this oxygen is often not economically valorized yet. So in the GH2 technology, we approach it differently. We use ethanol as the feedstock and we produce hydrogen and a high value chemical alongside. And this opens the door to a new economic business case where we can valorize this co-product. And actually, we also observe that we produce this co-product in much higher mass quantities. So in this case, the co-product plays a very important role. So we try to not only sell the hydrogen, but also the co-product alongside. So in our case, in the GH2 technology, our revenues depend on two main things, which is selling the hydrogen and also selling the co-product. So this means that knowing that the hydrogen prices today and also of the future are still unknown brings us to the co-product. So if we target a co-product with a high selling price, we actually mitigate some risk from not knowing the hydrogen price. The co-product, so we target a co-product with a high economic value to increase the revenues. And then, of course, the overall economic potential also depends on low-cost feedstock that is abundant. But we take into account all of these factors in our techno-economic analysis in the GH2 project. So environmental benefits can be translated into economic profits when we think of green labeling, but also carbon taxes. And we can actually look at carbon pricing because we know to what extent our technology can reduce on GHG emissions. So if we translate this into benefits from carbon taxes, we see that it adds to our technology. And we also looked at different co-products alongside hydrogen in previous studies, and we saw that in some cases, the carbon tax can actually turn the technology profitable, which was not before. So we think it's crucial today. Nevertheless, we also see that in future, other green hydrogen technologies evolve, and when we see an overall decarbonization of the industry, that carbon tax advantage might decrease a little bit, actually. We already talked about the carbon pricing, which can add to a green technology. Nevertheless, we also think that subsidies are important to kickstart novel green hydrogen technologies. And we think that especially the GH2 technology adds some value to the green hydrogen portfolio since, yes, we look at this business case where we have two highly economically valuable products. In our previous study, we looked at different possible co-products from various bioalcohols, and we saw that acetic acid is especially robust when compared to fossil and green benchmarks in various environmental impact categories. And yes, so we see that this might be an interesting co-product compared to various benchmarks. And yes, this is why we focus now on ethanol as a feedstock and possible co-products. And we see that there might be potential for acetic acid with a high volume market, but also other possible co-products such as acetaldehyde with large markets.